Okay, let's dive right into this. Welcome to today's explainer on the digital asset economy. Now, look, if you're watching this, you probably already know the fundamental flaw of the traditional working model, right? Most of us are taught from day one that income works in a perfectly straight line. You know the drill. You show up, you do the work, you get paid. It's a very simple equation. But the massive, glaring problem with that equation is that the very moment you stop working, the money just completely stops coming in. That right there, that is the classic time for money trap. And it is exhausting. But today, we're breaking down a completely different reality. We're actually going to look at hard data pulled from over 1,000 digital product launches. We're analyzing the exact, under-the-hood mechanics of how modern digital assets actually work in the real world. And most importantly, we are going to focus specifically on 5 digital assets that pay you forever, even if you stop working. We're talking about assets you build just once, maybe tweak and improve a bit over time, but generally, they just generate income long after your initial heavy lifting is done. So, if you're ready to finally stop trading your very limited time for a totally capped income, you are absolutely in the right place. Let's get into it.
So first things first, there is a massive fundamental difference in economic leverage here. Just take a look at the left side of the screen. That's the traditional job. Your income is 100% dependent on your active, physical, or mental presence. If you're sick, if you want a month off, the system breaks. Now look at the right side. This is the digital asset philosophy. Build once, earn forever. Or, as you might hear it called sometimes in the industry, build once, sell twice. But honestly, in the digital space, sell twice is an understatement. You can literally sell it 10,000 times. And here's the kicker, with almost zero marginal cost. Think about that for a second. Whether it's a piece of software, a really high-value template, or a targeted training system, once that asset is created, the cost to deliver it to your very first customer is exactly the same as delivering it to your 100,000th customer. It's virtually zero. Delivery is completely instant, the profit margins are incredibly high, and the asset just keeps working quietly in the background while you sleep, travel, or build the next thing. However, we need to talk about reality for a second. The landscape of what actually sells in this space has shifted dramatically in just the last couple of years, which brings us to a really massive realization.
So, based on that recent study of over 1,000 digital product launches I mentioned, we saw a massive, undeniable shift in consumer behavior. And it boils down to this quote: buyers in 2026 are not buying information anymore. They are paying for outcomes. Listen, for a long time, creators could basically throw together a generic 40-page PDF or some basic ebook on how to make money or how to lose weight, slap a $19 price tag on it, and just scale through sheer volume. But let me be perfectly clear. Those days are officially 100% over. The data clearly shows that the absolute bottom quartile of digital products right now, the ones completely failing to make money, are these cheap single-asset PDFs. Why? Because customer expectations have risen significantly faster than most creators have adapted. Think about it. People can get basic information from AI for absolutely free now, in seconds. Why would they pay you for it? They won't. What they will gladly open their wallets for, though, are complete systems, dedicated tools, and step-by-step playbooks that actually guarantee a specific outcome and save them massive amounts of time. They don't want to learn how to do it. They want the shortest path to actually having it done. And to deliver that specific outcome, you really have to leverage the sheer power of bundling. Across this entire data set of thousands of digital products, a fascinating trend emerged. When a creator offered a single standalone product versus a bundled package, the bundle outsold the single product 3 to 1. 3 to 1. And here's the absolute kicker. That happened even when the bundle was significantly more expensive. Now, I know that sounds crazy. The old school intuition was always that giving people a cheaper, stripped-down option would capture more sales because it lowered the barrier to entry. But the data proves the exact opposite is true today. Buyers who have finally made the decision to actually solve a problem want the absolute most complete version of the solution possible. They want the whole shebang. If you're selling a course and you bundle it with, say, custom Notion templates, access to a private community, and maybe a monthly Q&A call, the buyer doesn't just see a course anymore. They see a complete, foolproof ecosystem. They feel supported, and they perceive the value to be exponentially higher than just buying another video to watch alone in their room.
Now let's visualize what this looks like long-term, because this chart right here is a real game changer. When we look at a 12-month revenue comparison between just selling a one-time product and selling a product with a recurring layer, the difference is honestly staggering. Just look at the traditional launch model on that first bar. You see that massive revenue spike in the first 30 days? That feels great, right? But then look what happens next. A sharp, super depressing decay where revenue plummets and basically runs at bare minimum maintenance levels for the rest of the year. Now look at the second bar. By adding a recurring layer, maybe that's a monthly membership, a small software subscription, or an ongoing paid community, the 12-month revenue ends up being 2 to 4 times higher. The initial course or product gets the customer in the door, sure, but that recurring layer is what keeps them happily paying you month after month. Let me be blunt. If your business model is just a constant, exhausting series of new product launches to keep the lights on, you don't actually have a digital asset business. You have a digital product treadmill. And trust me, you will eventually burn out.
So to really master this space and get off that treadmill, we have to understand the overarching economic models at play here. You basically have two distinct paths to profitability, and the secret is that you absolutely must choose one deliberately. You can't straddle the fence. On the top row of this table, we have what we call the volume play. These are your lower-cost items, usually sitting somewhere between $10 and $50. To make this work, you rely entirely on massive reach, huge search engine traffic, and quick impulse buys. Then, on the bottom row, we have the value play. These are entirely different beasts. They range anywhere from $200 to $2,000, or honestly even more. These do not require millions of views or viral videos to succeed. Instead, they require deep trust, absolute authority, and premium positioning in your market. Remember, one single sale down here in the value play can equal 50 to 100 sales up in the volume tier. Both of these models work brilliantly if executed right, but they require completely different strategies. So let's break down the 3 specific tiers of assets that fit within these models, and along the way we'll highlight our promised 5 digital assets that can actually pay you forever.
All right, let's jump straight into Tier 1, high-ticket knowledge assets. As the subtitle says, this is where you're going to find the absolute highest profit potential. These products are precision-built to solve expensive, urgent, and high-stakes problems. And they're built for a very specific type of person, someone who is more than willing to pay a premium price for a guaranteed transformation, direct access to the creator, and a massive reduction in their own risk. Within this tier, we see things like cohort-based courses. People pay a huge premium here just for the live accountability and the community aspect. We also see high-end B2B certification programs where entire companies will literally pay thousands of dollars just to credential their employees. But the real star here, and our very first of the 5 key digital assets you should focus on, is the done-for-you system. Think of this as the modern, super high-ticket evolution of that old dusty ebook. Like we established earlier, people just do not want to read theory anymore. They want templates, they want exact standard operating procedures, automated workflows, and pre-built Airtable databases that they can literally just copy and paste directly into their own business. They want the work done for them.
And to actually succeed in this Tier 1 space, you really need a fundamental mindset shift. You have to stop selling theory and start delivering an operational system. Let me give you a concrete example. If you try to sell a generic 10-module video course called How to Start a Marketing Agency, you are going to struggle. It's too vague, it's too broad, and it sounds like a lot of work for the buyer. But if you package that exact same knowledge into a complete, ready-to-use agency operating system that literally includes pre-written client contracts, customizable pricing calculators, and a fully built Notion dashboard for project management, the perceived value absolutely skyrockets. You see the difference? You aren't just giving them a bunch of homework to do. You are literally handing them career leverage. When the perceived return on investment is that high and that immediate, price resistance practically disappears. Buyers aren't comparing your $1,000 price tag to cheaper $50 alternatives anymore. They are comparing it to the massive cost of their own inefficiency and all the missed opportunities if they don't buy your system.
Moving right along to Tier 2, recurring utility and software. If you want peace of mind, this is the ultimate path to predictable recurring revenue. So if Tier 1 was all about delivering a massive one-time transformation, Tier 2 is all about smoothly embedding your asset right into a user's daily or weekly workflow. And here is where we find our second and third top digital assets. Asset number 2 is the micro SaaS tool. Now, don't panic, this does not mean you need a team of developers to build the next billion-dollar platform like Salesforce. Not at all. It means a solo founder building a highly specific, very focused tool. For example, a specialized booking system designed only for tattoo artists, or maybe a simple automated invoice script just for freelance translators. It's a small software that solves one narrow, annoying problem brilliantly. Then we have asset number 3, the exclusive paid community. By moving away from those incredibly noisy, algorithm-driven free groups on platforms like Facebook, you curate a premium network of highly like-minded people. Members gladly stay month after month for the genuine relationships, the incredibly high signal-to-noise ratio, and the shared accountability. Over time, the community itself becomes this massive, unbreachable moat that prevents your business from ever being copied. You can copy a course, but you can't copy a thriving community.
Now, let's talk numbers, because the math behind these recurring assets is where true passive stability actually lives. $24,500. That is your absolutely predictable monthly revenue if you have just 500 members paying $49 a month. Just 500 people. On a global internet, that is a tiny, tiny fraction of an audience. But getting things set up is just table stakes. The real, undeniable leverage in Tier 2 is all about retention. A membership or software subscription compounds. Think about it. The members who joined 6 months ago are still paying you this month, while your brand new members just stack right on top of them. If you can manage to lower your churn rate by ensuring your tool or your community is genuinely indispensable to them, that $24,500 monthly baseline is just locked in. It's sitting there waiting for you before you even wake up on the very first day of the month. That is the power of recurring revenue.
And the pure magic of this specific tier really comes down to this one simple reality. People don't cancel software they use every day. True utility creates what we like to call a quiet dependency. When a specialized tool helps a freelancer send their invoices faster so they get paid quicker, or it helps an Etsy seller track their keyword rankings on a daily basis to optimize sales, it literally stops feeling optional to them. It's no longer just an expense, it becomes deeply integrated into their actual livelihood. And that kind of deep integration naturally kills churn. People just don't unsubscribe from the things that make them money or save them hours of headaches. This is the massive structural advantage of Tier 2 over those exhausting one-off sales. You aren't constantly fighting tooth and nail to acquire brand new customers every single month just to keep the lights on. You are simply compounding value over years.
All right, finally we arrive at Tier 3, high-volume passive assets. As the subtitle notes, this entire tier relies heavily on search visibility and massive traffic scale.
For many creators, this is the perfect entry point because it operates almost entirely on high volume and quick impulse buys. And this brings us right to our final two highlighted digital assets. Asset number 4 is high-fidelity templates. We're talking about comprehensive Notion workspace templates, gorgeous Webflow website designs, or even perfectly drafted legal contract templates specifically for, say, wedding photographers. Again, they sell shortcuts. The buyer absolutely does not want to start from a terrifying blank page. They will happily throw down $20 or $50 to just skip the line and get moving. And then we have asset number 5, which is incredibly powerful, the evergreen YouTube channel. This is such a fascinating asset class. Imagine you record a highly targeted tutorial video, something super specific like how to fix a leaking Delta shower head. You filmed it 3 years ago. But because people are constantly searching for that exact problem every day, that single video can still pull in consistent search traffic, ad revenue, and affiliate commissions for the parts today, right now, even at 11 p.m. while you're fast asleep. These Tier 3 assets require very, very little ongoing customer support or sales calls, making them incredibly, truly passive once they are well established.
But look, we have to be honest and address the harsh reality of Tier 3. Because the barrier to entry is so incredibly low, anyone can make a template or shoot a video, the broader market is wildly saturated. There are literally millions of generic stock photos and basic, boring templates out there that make absolutely zero money. The data here is crystal clear. Niche, high-quality content outperforms the obvious stuff every single time, without fail. Let me explain. If you upload 50 random photos of people smiling in a generic office to a stock photo library, you will earn nothing. Zero. But if you take the time to provide highly specific, premium aerial drone footage of, let's say, agricultural land being harvested, you will absolutely dominate that micro-market. The lesson? You only succeed at scale in Tier 3 by creating assets that are hyper-specific and undeniably top-tier in quality.
So how do we actually guarantee that specificity? That brings us to the niche down formula. This is your absolute framework for profitability across all of these assets.
Listen closely, because whether you are building a $2,000 comprehensive system or a simple $20 template, generic middle-of-the-road offers simply do not survive today's internet. You have to apply this exact 3-step formula before you build anything. Step 1, you must define a hyper-specific audience. Not just business owners, but exactly who. Step 2, you have to identify their most urgent bleeding neck pain point. What is keeping them up at night? Step 3, introduce your unique mechanism to solve it. When you combine those three, that equals profit. You see, most digital products fail right out of the gate because they are just way too broad. Creators try to serve absolutely everyone at every single experience level with every possible variation of a problem. But when you create a broad offer, you completely strip away your authority and force yourself into a miserable race to the bottom, competing only on price in a super crowded market. But when you create a narrow, highly specific offer, you get to compete entirely on relevance, and relevance commands a premium.
Let's look at a real-world example to see the stark difference between a broad and a specific promise. On the left side, we have make more money. Look at that. That is a massively broad, painfully vague promise that instantly blends in with literally a million other scammy products on the internet. If you see that, you're skeptical, right? It commands zero authority and absolutely zero premium pricing. Now look at the right side, a system for freelance writers to raise rates without losing clients. Boom! Immediately, a freelance writer scrolling by sees that and says, "Whoa, this is exactly for me. This person is in my head." They know immediately what the outcome is, they understand the value, and they are more than willing to pay top dollar for that specific structural advantage. Specificity doesn't just bump up your conversion rates a little bit, it fundamentally and drastically increases the perceived value of your entire digital asset.
So as we wrap up this deep dive into the digital asset economy, I really want to leave you with this core philosophy that kept popping up in our research. The goal isn't to stop working. The goal is to build things that can keep working longer than you do. Creating these 5 digital assets we covered today, those done-for-you systems, exclusive paid communities, micro SaaS tools, high-fidelity templates, and evergreen traffic channels, it takes real, focused, upfront work. There's no magic button here. You absolutely have to learn the skills, you have to validate your market, and you have to build something genuinely, undeniably useful. But the incredible difference between doing this and working a regular job is that your digital assets actually compound. The leverage you get here is infinitely scalable. Now, before we hit the final thought, if you are finding this breakdown valuable and you want to truly master the digital economy, do me a huge favor, hit that like button and subscribe to the Digi-Gold channel right now. We are constantly analyzing the data, doing the heavy lifting to bring you exactly what is working out there in the real world today.
So I want to turn it completely over to you now. We've looked at the high-ticket done-for-you systems, we've explored the recurring software and paid communities, and we've touched on the high-volume templates and evergreen content channels. Looking at all of that, which of these digital assets will you actually start building first? Are you going to go for the high-trust value play, or are you leaning more toward the high-traffic volume play? Drop your answer in the comments below. I seriously read every single one of them and love seeing what you guys are working on. Thank you so much for joining me on this explainer, and always remember, the absolute best time to start building your digital leverage was yesterday, but the second best time is today. I'll see you in the next one.